All right, so the recording is going. Once again, good morning, everyone, and thank you for joining us for session 3 of the program year 2024 training. For this session, we'll be overviewing income eligibility determination and income calculation. So we're going to be looking at income eligibility determination fundamentals, the available tools, documentation, sources of income, and just some general reminders and takeaways at the end. And the purpose of the training is to provide an overview of the income eligibility determination fundamentals and to provide instruction on the calculation methods. For program year 2024, IHCDA is continuing with an eligibility model in which we use 60% of state median income for all households, regardless of size. For those who have been with us for a few years, you know that under the previous model, we used a hybrid threshold in which we considered 60% of the SMI until that figure was outpaced by 150% of federal poverty guidelines limit. Historically, that switch occurred somewhere between a household of sizes 8 and 10. So it was really only affecting remarkably large households. So for this year, the 150% of federal poverty guidelines outpaces 60% of SMI once the household size reaches 9. And as with in previous years, IHCDA is very interested in analyzing the continuing effects of this change, particularly in the effect it has on overall eligibility, as opposed to impacting the matrix points. And so we are asking that all subgrantees try to monitor their denials, their income denials specifically for households size 9 and above, and report that to us so that we can determine whether this change has had an unintended consequence. So for income eligibility determination, when determining a household's income, the eligibility periods shall be defined as either the 3 most recent complete months prior to the date of application or the immediate 13 weeks preceding the date of an application. The current month shall not be counted as part of the eligibility determination if you're using that 3 complete month method, except in very limited circumstances. So these circumstances would be A, the household receives only fixed income, such as SSA administered benefits, and they've already received their benefits for the month of application, and they can expect to receive no more income for that month. The second circumstance in which the current month could be considered is it's the last day of the month, and that does render the current month as a complete month. And the third circumstance would be the household member's pay schedule is such that they can reasonably expect to receive no further income for the remainder of the month, and providing additional documentation would be burdensome for the applicant. So what does that all mean? Here's an example. Suppose it's November 22nd. A household of 3 presents as 1 adult receiving SSI, 1 adult receiving wages for employment, and 1 child. The adult with employment presents a check stub for November 18th. Now, if the employed adult's check stub indicates that they are paid on a 2-week pay period, and you know they are paid on the 18th, you can then determine that the next paycheck would be received on December 4th. The applicant states they no longer have access to the October 22nd pay stub. In this instance, it is acceptable to count November as a complete month and use September, October, and November income because that adult is not going to be receiving any further income for the month of November. You do need to note the rationale for counting November as a current complete month in the case file. However, if the employed adult check stub indicates that they're paid on a 1-week pay period, then the adult will receive another paycheck on November 25th, and therefore November would not be a complete month. Intake must either use the August, September, and October income if they're going to use that 13 or that 3 complete month method, or they use the 13 weeks of income method from the date of application. This is a slight change because using 3 complete months and 13 previous weeks should yield comparable results. IHCDA is removing previous guidance stating that in households with mixed income sources, the same income eligibility period must be used for the entire household. So that was kind of a restriction on your flexibility. So we are going to be giving subgrantees greater flexibility with that. These changes were made in order to bring greater simplicity to how we look at income, as well as streamlining our processes, to bring consistency across the state, um, to be sure that we are determining our income equitably, and to try to reduce burden for both applicants and LSP intake. And IHCDA is trying to make tools available to you to facilitate and reduce the burden of income calculation. We strongly encourage all subgrantees to train their intake to use all of these tools. So these tools do include the Excel workbook for 13-week employment income calculator, which we will be reviewing more in depth later in this training session. The EAP Connect onboard calculator pending this year's update. And we are aware that there needs to be an update to the functionality of that calculator in order to ensure that it is returning the same results as our 13-week workbook tool. And there is also an Excel workbook for other income calculation types that has been developed, maintained, and distributed by peers within the network. That is not an official IHCDA product, but a lot of your peers put a lot of work into that and continue to put work into it annually to maintain it and update it. And we are very appreciative of that. Our goal is that subgrantees should feel confident in their income calculations and the accuracy of benefit determination, and that monitoring findings for income calculations are reduced or eliminated. And as always, we do welcome feedback and suggestions. We have gotten a lot of feedback from the network, particularly with the 13-week tool, that has only helped us to strengthen it and make it I think, an easier to use and much more reliable and accurate tool. So we definitely value all that feedback that we get. So the benefits of using the income calculation spreadsheets and other tools for calculating income are that they help to eliminate mathematical errors. They provide a clear picture of how the income is calculated. They make it easy to double check to verify that the income is being entered correctly into the database. They show Renee, our monitor, or a federal monitor who, upon federal monitoring, how the calculations were arrived at, and they reduce errors in how crisis is calculated. So if intake uses an Excel spreadsheet in order to calculate the income, that spreadsheet should be scanned or saved and uploaded in this client file in order to demonstrate that calculation. Now, in most cases, the manual will list acceptable forms of income for different income sources in order of preference. Whenever a less preferred form of documentation is accepted, intake should be noting in the applicant file why the more preferred forms were unavailable. And as a reminder, the IVA, or the income verification affidavit, should only be accepted as last resort. For employment income, as an example, a request for earnings should be attempted before accepting an income verification affidavit. When you are documenting the income, remember that income is always calculated based on the date of application, not the date of application processing or the application completion date. For instance, if an application is received on December 13th but is not processed until February 1st, the income eligibility period will be determined based on the application date of December 13th. And same thing goes for if the applicant does not turn in income at the time of application, you're going to need that pay to be within 91 days of December 13th in order to be correct for the application date. Or for the 3 complete months, you would be considering September, October, and November. As long as income documentation is current as of the date of application, intake shall use the documentation submitted as part of the application without requesting updated information. That is just to reduce that burden on the applicant, and it also helps with your intake with not having to double handle files so much. As long as what they provide is sufficient, qualifies under the policies and the rules, it is preferable to definitely use what is provided. So in the example above, if the applicant submitted a 2-week pay stub dated December 3rd, then the intake shall not request a pay stub for January 28th, since December 3rd would have been the current pay stub at the time of application. If the applicant turned in a pay stub for November 5th, however, intake may request a more current pay stub or seek clarification that November 5th was the applicant's final pay with that employer. And of course, from a November 5th one, because it is within 90 days, you could still use that 13-week method. It is still recommended that you seek clarification whether they continued working after November 5th, for reasons that will become apparent once we go through the demonstration of the 13-week workbook. All right, I know it's early in the presentation, but once we get into the weeds of the income calculation, I know that things are going to take a lot longer. So at this point, we will take a question break. Lisa.
Okay, so on your last slide about the whole, we should still try to get a more current. So what good, I mean, honestly, I was excited about the being able to use a pay stub within the last 90 days to calculate the income. But now you're still telling us that we need to do the work to try to get the most current. And so that means you're still touching the application multiple times.
So to clarify, and I think I was trying to reduce wordiness on this slide, so I probably deleted some vital phrases. So that's on me. So if you're going to be using the 3 complete months method, a November 5th one would not work because you're missing a large part of November there. If you're using the 13-week method, you absolutely can derive that from a November 5th pay stub. What should be happening, though, just to clarify and be sure that you are not overcounting income, is you should be clarifying, since you turned in a pay stub for a month before you applied, is this your last pay stub, or are you still working there? And that's just going to so that can just be a conversation. That doesn't have to be requesting additional documentation. So I did misspeak there because I, like I said, tried to reduce wordiness. Does that make sense?
Yes.
Okay. Cool. Ingrid.
Okay, so I would like to make sure I clarify about not having to use the same time frame for the same income. So let's say I have one household member who provided us they applied November 30th. One's provided a check stub for the 14th. The other person for October. Both are still employed, and I can just use for one, the 3 months, and the other one, the 13 weeks.
That is 100% accurate.
Good. Thank you.
You're welcome. All right. Do we have any further questions before we move a little bit more into the weeds? All right. Seeing none. Once more into the breach. All right, sources of income. may include wages, salaries, tips, bonuses, commissions, self-employment, profits from business, military allotments, excluding combat zone pay, disability payments from insurance, Social Security, SSI, railroad retirement, railroad disability benefits, Black lung survivor benefits, income from rental property, life insurance payments, dividends, interests, gambling winnings, awards, pensions and annuities, retirement plans, royalties, strike benefits, unemployment benefits, veteran benefits, regular life insurance payments, workers' compensation, alimony payments, irregular income, odd jobs, or household support. A large percentage of these, mostly you're not going to see. Some of them you might see, one household in a season. So we are not going to go fully into the weeds with all of these. There is guidance in the manual for all of them. There's also distributed as an appendix to the manual. There is a quick reference sheet on kind of what we accept for each of these methods. And if anyone encounters any of the less frequently encountered sources, we do encourage you, if you have any questions about it, please, please, please partner with us. Because some of these, honestly, it's all very academic to us because we haven't necessarily seen them either ourselves. And so the more we can see it hands-on, I think the better guidance we are able to give. But we are going to review a few of them here, and the first one we will review is fixed income sources. So fixed income sources, typically federally administered benefits. Examples could be Social Security, SSDI, SSI, railroad retirement, VA benefits, etc. So with fixed income sources, you may take the current monthly amount and multiply by 3 in order to determine eligibility income. There is an exception, and that is in January and February. If the applicant presents a letter showing both the 2023 monthly benefit and the 2024 benefit with the COLA increase, then intake should be taking care to apply the COLA rate to the appropriate months. And that's just about, again, using the information that is provided and making sure that the income that we're counting is appropriate for the months that we are counting the income for. And like I said, that would only be in January and February. For December, obviously, you would be using just the 2023 amount. And once you hit March, you'd just be using January, February, March, all under the 2024 amount. So it's only January and February really where you're going to have that blend of both sources, or of both rates rather. And for federally administered benefits only, intake will use the net amount after any withholdings and deductions rather than using the gross amount. There's also non-federally administered fixed income benefits, such as pensions, recurring payment retirement plans, etc. So with those, again, you take the current monthly amount, multiply by 3 in order to determine the eligibility income. The caveat here is that our state plan states that we consider the gross amount of this income. Therefore, intake should be requesting a copy of the benefit award letter or a physical check stub showing the full benefit amount prior to withholdings or deductions rather than a bank statement showing the net amount. So if you get the bank statement and it is a non-federal benefit, it can vary. A lot of them, they are receiving a lot of them, what they're receiving is the gross, and taxes are not deducted from them up front. But with some of them, they are. So intake should be requesting that confirmation and documentation of that if the applicant is submitting a bank statement for that. However, if the applicant can't provide it, we don't want this to create a huge amount of burden. It's just important at that point that the intake documents that they requested a stub or a benefit award letter showing the full gross amount, and the applicant was unable to provide that. Unemployment benefits is what we will be reviewing next. Unemployment benefits may be documented via a last known employer, or LKE, report obtained by the subgrantee from the Department of Workforce Development, DWD, or via an applicant's printout of their benefit status from the uplink interface. Note that if the applicant does provide their own uplink report, they do need to provide the full report with payment details. A lot of applicants will just take a screenshot of their current status. That is unfortunately not sufficient. The full state-provided benefit must be considered along with any federal supplemental benefits, if any. Amount for each week may be calculated by considering the gross paid plus total withholdings. I believe that is still accurate. I've not seen a recent statement on this. So I will get 100% clarification on it. I'll be reaching out to DWD to ensure that we have the currently correct form before we release forms out to you, and I will also get clarification from them on how to read the statements, make sure that nothing's changed. And process date will be considered as opposed to the claim date, just because we're interested in knowing when the applicant actually received the payment, as opposed to what week they're claiming for or when they filed that claim. Self-employment. Self-employment can include profit or loss from a business, rental income, royalties, partnerships, S corporations, estates, trusts, farming, or church employee income. Because of the nature of self-employment income is calculated based on the most recent complete tax year, the income for the full year is divided by 4 to determine representative 3-month income. So that means for right now, if an applicant applies in October with self-employment, because we do use a tax form, we are actually going to be calculating their self-employment based on their tax year 2022. And if someone applies during calendar year 2024, after January 1st, up until April 15th, it is acceptable to still use that tax year 2022 as long as they have not yet filed their 2023 taxes. After April 15th application, since that is after tax day, I'm assuming tax day is April 15th this coming year. I've not actually looked that up, so that date is subject to change. But assuming it is April 15th, then after April 15th, they should have filed their 2023 taxes, and so that's when we would require them to turn in the 2023 taxes. If the applicant does not file taxes for self-employment income, then it is to be considered irregular or incidental income rather than self-employment. If we're counting as self-employment, we want to be sure that they are actually documenting it the correct way and paying taxes on it. So to properly document self-employment income, the applicant must submit their entire previous year Form 1040 tax return, including any applicable self-employment schedules. So whenever anyone has any self-employment income that they're paying taxes on, you should always first look for a Schedule 1. Schedule 1 is the additional income and adjustments to income. So the Schedule 1 is what it's going to do is it's going to summarize what kind of income is included in the return, and it essentially is going to indicate what other schedules you should be looking for. As far as those other schedules, the ones we are interested in are Schedules C, E, F, or SE. So Schedule C is profit or loss from business. That's the one you're going to see most frequently. As of the most recent tax forms, we are using line 5, which is gross profit. And I need to put another caveat in here, and that is that all of this is based on the 2022 tax forms. Have not seen 2023 tax forms yet. I believe they have not been approved yet. So once 2023 tax forms are sorry. Once 2023 tax forms are released, we'll compare them to what we have here, and I will issue additional guidance if needed. So as of the 2022 tax forms, Schedule C, we're going to be using line 5 for gross profit. The next most frequent one you'll probably see is Schedule E, which is supplemental income and loss. And this is what people will use if they are receiving any rental property income, any royalties, partnerships, S corporations, estates, trusts, etc. So on Schedule E, what you're going to be looking for is line 3 for rental income, line 4 for royalties received, line 32 for partnerships or S corporations, line 37 for estates and trusts, line 39 for real estate mortgage investment conduits or REMICs, or line 40 for farm rental income or loss. Schedule F is profit or loss from farming. I don't know that I've ever seen one of these come across to my attention, but if you see that, the line we use is line 9, gross income. And Schedule SE, self-employment tax. That schedule, we would only use line 5A, which is church employee income, and that is only going to be completed if they are using the long schedule SE as opposed to the short schedule SE. So the F and the SE is kind of here for informational purposes. I'm not sure that anyone's going to necessarily see those, but C and E, we absolutely do see on a pretty regular basis. Note that we are no longer adding the value of utility deductions to income, regardless of whether business is run out of the home address or not. That's a change that's been made a few years ago, and I just wanted to confirm that that is still our practice. And note that if the applicant's self-employment income is 0 or shows a loss, then that income is to be recorded as 0. We are not going to record a negative amount in the case of a loss. And if it is 0 or a loss, then self-employed applicants will not have to follow procedures established for 0 income applicants, even if they show no income or loss. So you're not going to have them complete a DWD or an IVA to show how they're meeting those expenses, because we know that because of the nature of self-employment, basically they're able to meet those needs often by taking advantage of deductions and things that are available to them that we're not taking into account in our income calculation here. All right, on to salary or wages. As a reminder, subgrantees are not to use a last known employer report to identify or determine employment history or income. Although, as we talked about yesterday, when it gets into people who are having difficulty documenting their income and you're kind of at that last resort where you're using an IVA, it would be an acceptable practice for program integrity purposes to obtain a last known employer report and just compare it to make sure that it is comparable to what they're reporting. Employment income may be calculated using a pay stub or a pay statement, a request for earnings statement, or if neither of these methods are feasible, an income verification affidavit. W-2s are in general usually not going to reflect the time period that we're considering in the eligibility determination. Therefore, W-2s are not considered an acceptable document for employment income in most cases. As with most things, there is an exception here. The exception is that W-2s may be used for applications submitted during the month of January, as long as the LSP is considering the 3 most recent complete months of income for that household. If the pay stub documentation discloses both year-to-date gross wages and year-to-date federal taxable gross wages, then intake is to use the federal taxable gross. However, if the pay stub documentation does not specify federal taxable gross, intake is to use the gross amount. Intake may not calculate the deductions on their own in order to attempt to determine federal taxable gross wages. Federal taxable gross wages, it should be noted, are sometimes notated as FIT gross on some pay stubs. And for the remainder of this presentation, any mention of gross wages or YTD gross wages shall be understood to imply federal taxable as the default if that figure is available. So to calculate income via the 3 most recent complete months, you must use the year-to-date amount from the last pay stub of the most recent complete month. For instance, if an applicant applies on December 17th, you would be using the last pay stub received for the month of November. If the applicant provides the first pay stub from the current month, it is acceptable to subtract current gross pay from that year-to-date gross in order to determine the year-to-date gross at the end of the most recent complete month. So to break that down a bit, suppose an applicant is on a 2-week pay period. They apply on December 17th, and they supply a December 10th pay stub. You know that the pay stub before December 10th would have been November 26th, so that would be the one that you're actually looking for. In this case, you may subtract the current gross pay for the pay period reflected on that December 10th pay stub in order to determine what that year-to-date gross would have been on the November 26th pay stub. However, if the applicant provides a December 17th pay stub, then you know that subtracting the current gross would give you the year-to-date as of the December 3rd pay stub. So if you're using the three complete months, you would need either the December 3rd or November 19th pay stub in order to determine that. Next step would be to take that year-to-date gross income from the end of the most recent complete month and identify how many months are represented by that pay stub. So in general, this is going to correspond to the month of the pay stub. So for instance, November would be month 11. The exception there is if the applicant discloses that they began work after the beginning of the year, you would need to subtract any months for which no pay was received. For example, if the applicant tells you that they received their first paycheck in March, then you would need to exclude January and February. In that case, you would take the 11 for November, subtract the 2 to offset January and February, and that would give you 9 months. That would be the number you're dividing by at that point. So once you determine how many months of pay are represented by that check, you're going to divide the year-to-date gross by the number of months represented by the pay stub, and that will give you the representative monthly rate. You then take that representative monthly rate, multiply it by 3, and that will determine the employment income for the eligibility determination period. However, again, the exception, if the applicant is no longer working and more than a month has passed since their last pay date, you might need to offset that multiplier and adjust the number of months you're multiplying by to account for 0 income months. So if the applicant stopped working in October and received 0 income for November, then applies in December, you would only use 2 months of wages, September and October, and then use 0 income for the month of November. Likewise, if an applicant applies in December and received their first pay in October, you would only use 2 months of wages, October, November, and then 1 month of zero income for September. So that is the 3 complete month method. We are now going to dive into the 13-week method. When calculating using the 13 most recent week method, the most recent available pay stub is preferred, but I do want to clarify that intake may use any pay stub provided so long as it does fall within the 13-week eligibility window. It is going to be required that the intake notes whether the pay period represents 1 week or 2 weeks. So the first step is going to be determine the week number out of 52 weeks represented by the pay date on the check. For our purposes, because Friday is the most common payday that we see, a week is going to be counted each time a Friday falls. So if the pay period is 2 weeks, once you count up what week number is represented by the pay date, if it's an odd numbered week, for a 2-week pay period, you're actually going to round that up. So say someone applies. I have examples. Sorry, I'm not gonna extemporaneously give an example here. If the applicant started working after the beginning of the calendar year, try to determine when their first pay occurred. Determine the week number of this pay date, subtract 1, then subtract it from the pay date week number. I promise we're going to get to an example on this. You would then divide the year-to-date federal taxable gross or year-to-date gross by the number of weeks represented on the paycheck. This will give you the representative mean weekly amount. You would then multiply that representative weekly amount by 13, and that will give you the eligibility determination period income. Caveats. If the applicant is no longer working at the job, you will need to determine how many weeks have passed since the last pay and adjust the multiplier accordingly. For instance, if the last pay was 4 weeks prior to application date, multiply the representative weekly amount by 9 and count 4 weeks as zero income. Similarly, if the applicant has not been working at this job for the entire past 13 weeks, you will need to determine how many potential pay weeks were not included and then offset the multiplier by subtracting the number of weeks not represented from 13. So here's an example. Ash Williams worked as a sales clerk at S-Mart. Ash applies for EAP on April 15th, 2024. Ash provides a pay stub from March 8th, 2024. He explains that that was his last pay and that he no longer works at S-Mart. Ash's pay stub shows that his year-to-date gross was $6,000 and that he was paid according to a 1-week pay period. So when you're looking at this example, March 8th, if you count up by the number of Fridays in 2024, March 8th represents the 10th week of the year. Therefore, $6,000 divided by 10 weeks equals a mean weekly income of $600. Since Ash has not received pay since March 8th, we must determine how many weeks to offset the 13-week multiplier by. Because his pay was weekly, we must account for 5 weeks. So it would be March 15th, March 22nd, March 29th, April 5th, and April 12th, which was the last Friday before the application date of April 15th. Therefore, we can determine that we are to count 8 weeks of this employment income for Ash, because we're going to take 13 and subtract the 5 weeks that he did not receive pay. So we take the 8, multiply that by the $600 per week. During the income eligibility period, Ash received $4,800 of income from S-Mart. And an IVA will not be required for the month of April because it is not a complete month. and he did receive pay on March 1st and March 8th. So March is not a zero income month either. We know that the 13-week method is very complicated and unwieldy for an intake staff to calculate by hand. And therefore, we have developed a spreadsheet, a workbook really, to automate this calculation with some simple data entry. Now, I do also want to acknowledge that we know that there have been challenges with this workbook last year, particularly when we moved from calendar year 2022 into calendar year 2023. There were some inconsistencies with the way Excel was handling the formulas. So I spent a lot of time looking at what was causing, what the root cause was of those challenges and those inconsistencies in the way Excel handled them. And we have made changes that we do believe will result in these issues no longer being a problem. And I and several members of the team here have proactively tried to test both the 2023 and the 2024 worksheets. They both appear to work as intended at this point. However, I do want to encourage everyone to please double, triple, quadruple check me on this. My goal is absolutely to have this right, and to have a tool that you all and that we can feel comfortable and confident and to trust that's reliable. So we do strongly encourage all subgrantees to adopt this workbook and to ensure intake staff are trained on its use. So at this point, I'm going to walk through a demonstration of what it looks like to enter the data onto this workbook. I do want to share that the new version of the workbook, I have written up some instructions. So there will be an instruction sheet there. So let's go through what the process looks like when intake is using this this tool to calculate income. So as you see along the bottom, there are 3 tabs here. First tab is the instruction sheet. Second tab is the sheet that one would use if they are working with a 2023 pay stub. And the third tab is a sheet that you would use if you're working with a 2024 pay stub. There are differences in the way the formula is handled based on the year that I have not figured out how to get around in Excel. Excel can be very, very powerful tool, but can also be a very finicky tool. So I still have not figured out how to make it correctly handle dates regardless of the year in a single unified sheet. So we are still working with separate sheets. So first step whenever anyone is working with this is to identify which sheet they're going to use. We're going to use the example of Ash Williams that we just kind of talked through. So as a reminder on that one, Ash applied for EAP on April 15th, 2024, and he provided a pay stub from March 8th, 2024. So that tells us that the first thing we're going to do is make sure we are on the tab for the 2024 pay stub. In trying to make this as simple as possible, we have highlighted in yellow all the tabs that are going to require input from the intake. So first thing to do is enter the household member's name, an application key number, and that's just to be sure that we can keep all this documentation with the correct file and know what file we're working with and make sure that the documentation matches. Employer is helpful to put in, especially when there are multiple employers within a household, and especially if a single household member has worked with multiple employers during the past 3 months. Application date we said was April 15th. And we said the check date was March 8th. So some things to notice here, now that we put in both the application date and the check date, is we now have eligibility dates populated down here. So we know that the period of time we're going to be looking at for eligibility based on 13 complete weeks or 91 days is January 15th of 2024 through April 15th, 2024. So even just entering an application date in is going to help you map out what time period we're looking at. With putting the check date in, we also know that the eligibility pay represented in the check is January 15th, 2024. Or sorry, the eligibility pay we're looking at is January 15th, 2024 through March 8th of 2024. We said that Ash has worked at S-Smart since the beginning of the year. So we are going to pull this menu down to yes. At that point, it populates that the year to date represented in this check is not quite populating correctly. So I do need to correct that. I'm glad I'm looking at this again. This is clearly something I missed during the testing.
Hey, Tom, you just need to put the 2 in the check date. It's 3/8/2024.
I did notice that, but we also have the year to date should read January 1st, 2024, not 2023. So I might not be using the most frequent thing, the most recent one, because I'm pretty sure I did fix both of these. Let me just. Yeah, I think I just pulled up the wrong file because I do remember seeing these during testing, and I either fixed them and didn't save, or I'm using the wrong one. Regardless, we're gonna move forward with this for now. Right. Oh, yeah, that's what that one is. But this one, change that. Okay. Because it was messing up the year-to-date weeks. So having fixed that, now that we see that the year-to-date dates are populating correctly, it is telling you that there are 10 weeks represented in this check, which we did say in our example that that March 8th is the 10th week of the year. Since we said yes, that they worked from January 1st, we do not have to enter anything for the approximate first pay. However, since we said that Ash is no longer working, I'm going to say no, he's no longer working. And I do want to also show, so if we had said yes, he was still working, then it would take this and it would sort of continue to calculate out until that eligibility date of April 15th. And so you see it would make 13 weeks, the number of eligibility weeks we're looking for. But since we're going to go ahead and say no, March 8th was his last pay date, you see it changes that eligibility weeks multiplier to 8, which again matches with what we came up with when we said that there were 5 weeks of zero income there. And finally, we said that there was $6,000 as year-to-date gross income. So once we put that in, once again, 10 weeks, $6,000 year-to-date gross. So we are saying that's $600 mean weekly gross. For 8 weeks is $4,800 for the pay period. Sorry, one more thing we forgot to do. We forgot to say this is a 1-week pay period. So just to just to go back to this. Yeah, by entering, what was it? By entering 9 pieces of data, we came to the same answer that we came to with this kind of unwieldy series of hand calculations. And so, yeah, that's what we're looking at. Request for earnings statement. The request for an earnings statement is a form that may be used to get wage information directly from an employer when an applicant is unable to provide pay stubs. It may also be helpful for applicants who are involved in gig work and have no concise report of aggregate earnings. Because of the potential for falsification of this form, subgrantees must obtain the applicant's release signature on the form and the employer's contact information, and then contact the employer directly to send the form. I know that there was a lot of discussion in the chat yesterday of making it the applicant's responsibility to return that to the employer. I have to, in the name of program integrity and ensuring that we are can be reasonably certain that we're actually getting the information from the employer. I have to advise against that, just because we want to be sure, we want to be sure that we are getting information from a representative of the employer. I think I can say that if you are going to give it to the employer, to the applicant, and have them return it to the employer, I would still advise you to get the contact information so that if you don't get it from the employer, you are able to follow up with the employer. But even so, if you make the applicant provide that to the employer and get it back, I would strongly advise that you also follow up with the employer using the contact information provided on the request for earnings statement form, and just verbally confirm that they are an authorized representative and that the information provided is correct. I think that there is a bit of risk in kind of opening the door for just basically putting the means of verification into the applicant's hands without any oversight, if that makes sense. And then finally, the least preferred form here is the income verification affidavit. The income verification affidavit allows applicants to declare any irregular or incidental income, declare zero income for any month or all 3 months of the eligibility determination period, or as a last resort, to declare employment income for which they have no other documentation and documented attempts to obtain pay stubs or a request for earnings statement have failed. Note that we are required to use gross income for employment and not net. Therefore, the best practice is to verify an applicant's pay rate and average number of hours worked per week and document this. Ensure that the figures provided on the IVA jibe with these. If an applicant declares zero income for any of these prior 3 months, the applicant must complete Section 2 of the IVA, explaining how they have met these financial needs while they had zero income. If they have declined to answer these questions, the IVA is incomplete and invalid. If an applicant discloses in Section 2 that they have received cash payments for household support made directly to them, this is to be counted as household income. So here's some examples of some IVAs, just to show. I think that the new redesign, there's definitely less for the applicant to fill out. So in Section 1, you see John Brook put in for that they received undocumented income of $1,200 per month. Because there's something filled in for all 3 months, nothing is needed in Section 2. So Section 2 is left blank, so it's just a matter of putting in what they received for all 3 months and then signing off the acknowledgement statement. Example 2, Chauncey Gardner received $200 for the month of September, but nothing for the months of October or November. And so you see in section 2, Chauncey marked that he had family who paid his rent or mortgage for him. He has not paid on his utilities. He's used a food bank or food pantry to receive for food. And for other household expenses, a family member gave him $300. As a reminder, and this is using the most recent revision of the IVA that I've made, but this has not been revised since our discussion yesterday, when it was pointed out that the language about a friend lending money should not be counted as income. So that will be changed. But do remember that if someone indicates that someone gave them money directly, that does get entered in as income when determining the household income. All right, I am ready for questions. Hi, Angela.
Hey, can you hear me?
I can.
Okay. On slide 29, when you did your example, you talked about the 3 weeks not being counted for income, that we didn't need a zero income for that. I'm 99% sure on my spot check this year that Renee, I had to go back and capture like 2 weeks that weren't accounted for on an IBA. Can we get some clarification on that?
Yeah, I will. I'll definitely talk with Renee and Steve and make sure that everything is consistent with that. But the way the policy is written, we should only need that whenever there's a month with zero income. It shouldn't really come down to weeks. So, in this example, he did receive income during the month of March. He received March 1st, March 8th, and April is not a complete month. So I can see both arguments. I do want to say that I can see both arguments. But my intention is that, since the month of April is not up yet, it's conceivable that there might be income still forthcoming. They might get another job. There might be some other thing. So I will ensure that we are consistent in how we're doing it.
Yeah, just clarification would be great.
Yeah, for sure. Destiny.
Hi, this is actually Laura Collins.
Hey.
Hi, I just wanted to clarify something regarding the self-employment. Did I understand you to say that if they apply the 1st of 2024 up until April 15th, we can use their 2022 tax forms?
Yes, because it is not required for them yet to have filed 2023 taxes. Now, if they file 2023 taxes early, they should absolutely be using the 2023 taxes. So it's the most recent taxes that they have filed.
Right. Okay.
And so basically, we up until April 15th or whenever tax day falls in 2024, if it gets adjusted again, we can't compel them to file taxes before the deadline.
Right. Okay. In the past, we were told if they hadn't filed their taxes yet to have them record their gross income on an IVA. So did that change?
No, as far as I can remember, this has been pretty consistent policy. Is that guidance that you got from me? Did I misspeak?
I'm not sure. Okay, I just wanted to clarify that. Well,
it doesn't sound like something I would have said, but I'm I'm human, and I'm very, very willing to say, like, yeah, maybe I misspoke. But if I did misspeak, I am sorry about that. But our policy is that we should be using the most recent taxes that were filed.
Okay, thanks for the clarification.
Yeah, for sure. Rosa.
Okay. I'm sorry, I forgot what my question was. Okay, well, since you're on the slide with self-employment, if a person applies, let's say January 25th, they fill out an IVA declaring self-employment. We request tax returns, and we don't get it back until, I don't know, let's say a couple weeks later.
Okay.
But they did their taxes after they applied. So is that still acceptable? So if they applied January 25th and they did their taxes February 8th.
Sure. So typically providing income documentation from after would be a no. I'm going to go with a situational answer here and say that, basically if they're applying in 2024 and what they're providing is basically now 2023 taxes, I mean, yeah, that's actually going to be closer to what we really should be looking for than 2022 taxes would be. So, yeah, it would be kind of an exception to the general policy, but I would say yes, that would be acceptable.
Okay. On your 13-week example that you gave, with the not having to collect a IVA for that month,
Yes.
that looks like there is a month of no income. Are we able to, would it be wrong if we do get an IVA? Because to me, that looks like he's missing a
And
couple
I
weeks.
can see how it looks that way. The reason I'm saying that is because, he's applying on April 15th and basically April isn't done yet. So, April 15th, April to that point so far is 0, but it's not necessarily going to be a complete month of 0. That being said, we want to reduce burden on applicants. However, our release statement and certification statement does authorize you to gather whatever information you need in order to verify information provided. If you choose to get that, I think that's acceptable.
Okay.
Yeah, I would, and obviously Renee and I haven't talked about this, but I would advise Renee that, that in my mind, would not be an error. It would be more documentation that is needed, but it would not necessarily be completely out of line, if that makes sense.
Okay. Okay, I do have another question, but I'm not sure if it falls here. So I don't know if to ask it or wait like to the end.
If you want to wait till the end, I think I don't have a whole lot of hands here, so I think there's going to be a bit of time still at the end. So
Okay.
yeah, I'm happy. Either way.
Okay. And I have another one that we came up with yesterday, so I'll just ask those two at the end then.
Okay, that works. Thanks.
Thank you.
Yep. Julie.
Yeah, hey, I just wanted to confirm on your example of, say, a fixed income client that applies very early in the new year. It sounds like the expectation is we'll use what they provide, and in that if they apply in February with a February bank statement showing their 2024 SS amount received, we'll use that ×3 and not request anything about 2023.
Correct.
It's only if it's showing that we use it.
If
Okay.
if what they provide is that letter that specifically says, you know, you're getting a COLA adjustment, here's your 2023 rate, here's your 2024 rate. If it explicitly says that, that information should be applied to their situation. But if they just give you like a bank statement or like an update letter that's like, here's your 2024 amount without mentioning what the increase was and what the 2023 amount had been, just use what they give you.
Okay, thanks.
Yep. Ingrid.
I was going to talk about the self-employment because I had the same information that we could use an IVA if they hadn't done their taxes yet. But as I've been thinking more about it, and you did clarify that for us earlier this year in a case, I wonder if it was because somebody did not have, they were not self-employed the previous year, but they were self-employed last year and just had not done the taxes yet. And so I think that may have been it.
That's very
again,
possible. That sounds plausible.
You know, and I think some of that may have then gotten lost in translation as we applied it. So that is all.
That makes sense. Thanks for that clarification, Ingrid. Okay. Sorry, I see that looks like we have 2 chat questions that looks like it's from someone without a microphone. So I am going to address those. First one is, can you use the 13-week worksheet across 2 different calendar years? So for instance, income in November and December 23 and January 24, for example. That's a great question. So what you would really want to do is you'd still want to just use one pay stub. As long as that pay stub is within that 91-day window that's given when you're using the spreadsheet, when you type in the application date, any of those pay stubs would be fine. But you're going to want to calculate based on just one of those pay stubs. So you would use the sheet that corresponds to the pay stub you're using. So if you're using, you know, a pay stub from December 23, you'll use the 23 the 2023 spreadsheet. If you're using that pay stub from January, you use the 2024 spreadsheet. Once you plug in all your dates, it's still going to just break down what that average weekly pay is, and then multiply it by 13. So, you know, best usually when you are taking a pay period that has more, or a year-to-date check rather, that has longer employment in it, it's going to be less susceptible to any variations. So for instance, let's say you use a 2024, the January 2024 pay stub, and this person's working in retail, and they're working a lot of extra hours because the store is being slammed with returns from the holidays. When you break down, if they're working a lot of extra hours, when you break down that weekly amount, that might be inflated from what they normally work during the course of a year. And that inflation, unfortunately, is going to be multiplied by 13 when you calculate it. So in that case, it might be better for the applicant if you use a 2023 pay stub, because any variations will be diluted by the fact that you're counting across, 52 weeks instead of maybe 2 weeks, if that makes sense. We're getting pretty in the weeds as far as mathematical concepts here, but yeah, so you would only use one. I think it would be better for the applicant generally to use the pay stub that has more weeks represented in it. And question 2 here is, any guidance on what to do when the 14-day timeline to receive the request for earnings form bumps up against a short timeline for the disconnect date on the utility bill? That is a great question. my guidance would be to try to work with the utility provider, explain that you have an application for the person, that you are working on getting all the information for eligibility, that you're trying to make that determination, and that you just, give them a date on when you will know for sure, and just basically ask them to delay until after that date. And if you need to call IHCDA into it, we are very happy to assist you in advocating on behalf of our applicants. We do also have some pending language that we're trying to get into the MOA that will help with this, that we hope to be able to talk about tomorrow during the first session. So those are both great questions. Thank you. Lisa Ritterskamp.
I just had one point of clarification when you're talking about using a pay stub within the application date. Assuming you can use any pay stub you're saying that falls within that 13-week pay period, assuming that they've not quit their job or been fired. In other words, they're still employed there. So I just want to be clear that everybody understands you can't just use anything. You have to be certain that they are still employed there.
That's a good call. If they're not still working, then it is for the eligibility pay, it's automatically going to default to that check date. So yeah, if they're not still working, then in order to get an accurate counting here, we are going to need the last pay stub specifically.
And we use a income form, I'll say, that we ask people about their employment so that we can, not that they always fill it in correctly or fill it in at all, but sometimes it does help us get a better picture of that kind of a thing.
That sounds interesting, Lisa. I'd be interested in seeing that, and it might be helpful for other agencies in the network.
Okay, thank you.
Thank you for sharing. All right, so we have 15 minutes left, and we are coming up towards the end of the presentation here, so we should have a good 5-10 minutes left for final questions at the end. So general tips and reminders. It may help to chart the eligibility determination period for a particular file based on the application date in order to visualize the months that are being counted, especially if household members have worked multiple jobs. Remember that entering the application date onto that 13-week spreadsheet will calculate and display the income eligibility window for you, which will help you to chart or visualize. When looking at a bank statement, recurring payments are often marked with PPD. So if you look for that, you can be certain that that is a recurring payment, probably usually monthly, but not always. Refunds, whether for store returns or bank fees, are not to be counted as income, since those are funds that have already been paid by the applicant and are just being returned to them. If there are unexplained deposits on a bank statement, an intake worker should ask the applicant about them. If they're present in the documentation, they are fair game and they are subject to monitoring, both by us and by the feds. Applicants may not redact or alter any of their income documentation. Individual income amounts under $1 do not need to be counted. For instance, monthly or quarterly interest earned on most applicants' bank accounts can most likely be disregarded. These are usually counted in the pennies. Try to simplify wherever you can. If you have a pay stub where the year-to-date gross is equal to the current pay, you know that is a first pay stub at a new job. Therefore, if that year-to-date is equal to current pay, there's no need to do any math at all. Just count the income. Likewise, if you know that somebody started a job within the past 3 months, just document that, and you can just take that entire pay stub as income, since it could not possibly count for more than 3 months. In general, the only reason to request a last known employer report from DWD is for an applicant claiming unemployment income. But like I talked about when Rosa asked about it, that does not mean that you can't request it in other situations, especially if you suspect that the applicant is not being honest, or if you just need to verify something. So yeah, if you have reason to believe an applicant is being deceptive, non-compliant, or potentially fraudulent, you do have the right to request this report as part of your investigation. But remember, and we are going to get a lot more into this in our afternoon session today, we are not detectives. We need to be cognizant of fraud, waste, and abuse, but most clients are not trying to defraud the government. Most non-compliance stems from applicants not understanding the requirements or not realizing they need to claim certain pieces of income. So try to be open, transparent, and communicative. Be ready to educate, give second chances. But again, we're going to talk about this balance in the afternoon today. Income calculation, there's a little bit of an art to it, a little bit of a science. I think we've talked a lot about the art of it today. That being said, we are trying to tip the scales back to science in order to take away some of that ambiguity, both for applicants and for our intake workers. You know, we're really working hard to try to make things as objective and, believe it or not, as simple as possible. You know, I think that's one of the reasons why I wanted to really get into the weeds and really kind of talk about all the calculations that are going on in the background with that spreadsheet. You know, we're really trying to do some pretty complicated and sorry, I just lost my train of thought. But we're trying to do some complicated calculations with a lot of finesse, and to try to get down to where you can just punch in 9 or 10 pieces of data and get that is a pretty big lift that we're trying to do. But as a rule, income calculation can only be as good as, or can only be at best as good as the supporting documentation used for determination, and that is why we're really trying to push for getting the most preferred forms of documentation, and to note the reasons why less preferred forms of documentation are accepted. All right, so we have 10 minutes left for any last questions. Brad.
All right, so clarification of yesterday's training. I did my homework. Out of nine vendors, this is on the payment agreements. All right, so out of 9 vendors, I have 1 vendor that does not do payment agreements. I have 2 that do the payment agreements. It's on the bill. They are disconnected on the due date.
Okay.
I have 1 vendor that says that it is on the bill, but they're not subject to disconnect. And the other 4, they allow payment agreements. It's not on the bill. They cannot put it on the bill. The customer will sign a contract with the vendor, and they may or may not be subject to disconnect. So my question is, on these payment agreements with the crisis benefit, does it have to be on the bill? Or can I use the signed contract?
Once they reach a certain timeline numbers, I'll send you the numbers with the dates. Like I'll put the
So I think the signed contract is going to be. Sorry, is that chatter in your background, Brad, or is that?
Oh yeah, sorry.
Okay, no worries. I just wanted to make sure. Yeah, I wanted to make sure that we were.
Yeah.
Okay. So I think the signed contract could be used if. And so the caveat there is that we want to be sure that has basically just been entered into. You know, if it was a 6-month agreement and like they're 4 months long into it, we don't want to pay on the entire 6-month agreement. if that makes sense. So I think
Mhm.
that's kind of going to be the deciding factor there. This might be a case by case determination that would be made. I do want to back up though to the first thing that you said, where I think you said there was one who just doesn't do payment agreements.
That is correct.
Can I ask?
Davies Martin, REMC.
Okay. Payment agreements is actually one of the terms of the moratorium. So we are going to have some discussion there. um,
What really got me is some of the vendors are saying they just can't put it on the bill, which I can understand. It, you know, they have databases and stuff like that. They're the little bitty cards or whatever. So that's why I was trying to determine for training purposes during intake, you know, are we going to be doing, you know, payment agreements as a regular app, or are they going to be put in the crisis, you know, because they're up for disconnect, that type of thing. I'm just trying to get our training ready.
Yeah.
So I just wanted to bring it up with you to get a clarification. It has to be on the bill.
You need to have some kind of documentation of it. You know, we do have the request for utility or fuel account information now. Honestly, if they can send you some in-house documentation by email, I'd be fine
Okay.
with that.
Okay.
We just need documentation of the current standing as of the time of application is all. It doesn't matter if it's on the actual bill, I would say at that point, especially if their bills are not set up for that. But yeah, that REMC that says that they're not going to offer amortization agreements, which are required by state legislation, we'll revisit that.
Okay, thank you.
Thank you for that. Rachel.
Okay, so kind of going back to what someone mentioned yesterday with DoorDash. Technically, a DoorDasher is an independent contractor, so that would be considered self-employed, correct?
Yes and no. Leah, are you available to talk at this point? Because I know that you've done a lot of work with income on gig work.
Yeah, so during monitoring, I have seen that there's been some documents that could be pulled by DoorDash, and there's a company called Branch. So I started looking up some DoorDash information, and there's actually a really easy way for them to get access to their DoorDash pay. So if someone is saying that they cannot get access to it, it's actually very easy. There's actually two ways. They can email their customer support and get a full breakdown through their email, or they can go through their pay portal and get it broken down by year to date and month. So
then if, let's say they're going through the pay portal, which 90% of them probably will, will they report that on an IVA, or do we need some kind of paperwork documentation?
I've seen the paperwork be used, so I would think that you would just want to use that just to prove, but that would be up to Tom on how he wants you guys to show it, I guess.
So they're capable of printing out whatever it is they get from their application?
Yeah, so this was a 4-page document, and it literally was between, like, I think the time period they applied in November, so it was like from June or July all the way until that date, and then up in the top it had the year-to-date amount, and then it had every single payment. Now it was a little bit like messy where it was like it would say like 7/12 they got paid this day, but then the next day it would be like 8/19. So but you could narrow it down between your 3 complete months or your weeks, or get the full year and then just divide it. So I did see one of those actually, I think this past week, and it was, like I said, 5 pages long of just everything they've ever gotten paid and the way it was paid. So They have like things called fast pay and everything is their direct deposits. So.
Okay, so
Yeah.
one more question. Can you send me how they can get that? So when a DoorDasher
Yeah.
says to me, well, I don't know how to get that, I can walk them through it.
Yeah. So, yeah, I can look up the step by step, but basically it's interesting that someone would say that they don't have access to it because in order for them to DoorDash on their app, they have to have their pay portal on there as well. So like if someone's saying I don't have like they can see their pay the second they get done with the DoorDash of the day. So like they see their like gross every order they do. So
But
yeah, but no, I will definitely give you how to do it. But it's some people just may not be super tech savvy, but there's multiple ways that DoorDash offers that. So I can give you this step by step. And then, like I said, if they're saying that they still can't, there's even a support email that they can submit and get a full printout of everything they've ever done through DoorDash.
okay, and even having that support email would
Yeah.
be helpful.
Yeah.
And then somebody just asked in the chat, what about other gig issues? Uber, Lyft, do you have information on those?
I mean, I can make a list if it's easier, just because I've looked at those things before. But the other one that I noticed, I think there's a new thing called branch, and I don't know what that is, but that, like, again, everyone has these like ways to get the pay statements. So because they legally have to give them their records. So, but I can make a list of all those. But I don't know about the IVA, like if that's something you'd rather use instead. I don't know. But I'm just saying if someone says they cannot get access and they'd rather fill out the IVA, that's not necessarily correct.
Okay, yeah, we would
Yeah.
prefer the paper, but
Yeah.
a lot of people just don't. They're like, oh, well, I know how much I made on this order, but I don't know how to get all of them. So
Yeah. Yeah.
thank
No.
you.
Yeah, no problem.
Ingrid here, Leah, can you just email that to all of us? Because I think we all would benefit from it, please, and thank you.
Yeah. Mm-hmm. I can do that.
Yeah, and just to reiterate, I mean, this whole, with documenting gig work and calculating it, we are learning right alongside with you guys. It's, we're kind of in the Wild West here when it comes to this stuff. So we're having to pivot, and it's during a time where there's a lot of other upheaval, which is making it difficult. So we're sort of in the same boat as you guys. So I do understand the frustration that you're feeling with our inability to give one size fits all guidance. I think unfortunately, by the very nature of it, I don't know if there is a way for us to provide one size fits all guidance. But we are going to continue to look into, and to provide tools and resources where we can. And I just want to really express my gratitude for Leah for the work she's done on that already, and for sharing her expertise there. It is 11:30. I don't see any other hands up. Rose, I know that you. Oh, there you go. All right, I have another couple minutes, Rosa.
Okay, here are my questions.
Okay.
Yesterday, we were speaking about incomplete letters and what it meant to each of us on being able to email the letter. So some of us took it as it's acceptable to email. So are you referring to an email Outlook, or the email as sending through the portal?
An
Email.
actual email.
Okay, an actual email.
Yeah.
Okay.
That way it's an independent record. Because I think the portal message, I don't know what it actually shows the applicant, but I don't think it's actually going to send a document. So we
Okay.
want to send the actual document.
Okay.
Yeah.
We had came across a few applicants that are at the at-risk age. but are claiming no income, no Social Security, no pension, no SSI, anything of that sort. Previous years, we were trained that we are to ask the client to go get verification from Social Security office that they're actually not getting any benefits. I know you speak a lot of trying not to burden the applicant and going through all that stuff. COVID hit a lot of, I don't know if the Social Security office is a little bit more manageable before COVID. So is that something we need to be requesting?
I'm going to say that I'm not going to require it. I'm going to leave that to your discretion. I think it would be good as a program integrity measure, but I'm going to leave that completely to your discretion. As far as the Social Security offices and their status of being open or closed, I will say that it's pretty quick and easy to sign into a My Social Security account or establish a My Social Security account if they don't have one, and to basically request a letter of their status, which should, I believe, generate immediately.
Okay.
But yeah, but at your discretion, I'm not going to require it.
Okay. And a third one that I seem we've always ran into, your IVA always looks so completed. Ours don't. So the IVA in that top section says my source of income or source of income.
Yes.
Something of that along those lines.
Mm-hmm.
Does that need to be completed? Because it seems like they always miss that particular phrase.
Yeah, I would say it absolutely should be completed. I would say if it comes back not completed, you don't necessarily have to have, if the applicant like completes the IVA but misses something like that, you don't necessarily have to have them complete a whole new IVA. I think a phone contact is sufficient just so we're documenting like what it is that we're counting.
What if we can't reach them, but it looks complete, just that income is sitting there, I don't know where it's from, and I can't reach them? Letter's gone out just to be on the safe side. I hate to say it, but there's a few we may have denied because of that.
Right. You know what, Rosa? Let me think about that. You know, I don't want to necessarily give an off the cuff answer that I haven't thought through. So let me think about that and get back to you.
Sounds great.
All right.
Thank you.
Thank you. Good questions. All right, we're about 5 minutes over time right now. I think this has been a great discussion. Hopefully everyone learned a lot. I know there's a lot to digest in this, so people might have questions later. I am going to stop the recording.